In this week's FAS TV, we meet chartered accountant and farmer Elaine McKilligan, who discusses how she started her own accountancy business with the aim of being a trusted advisor for farmers and rural businesses, while offering a different kind of accountancy help. With many farm businesses now receiving their basic payment, Elaine discusses the importance of budgeting and managing cash flows for rural businesses, as well as discussing managing tax position. She also discusses the key issues she is seeing currently affecting farmers and those that could affect farmers going forward.
I'm Elaine McKilligan. I'm a chartered accountant. I'm married to Graham. Graham and I farm here at Coxton, Cornhill. We've been here since 2009 and we've got a second unit about 3 miles up the road as well. We've got 200 acres between the two units and we've also got seasonal grazing out and about various places as well. So we lamb 400 ewes every year. They're all mule ewes. There's a few homebred Texel cross mules in there as well. So all the ewes go to Texel tups. We also buy in 350 plus ewe lambs every year through Dingwall. It's all mule ewe lambs that are HISHA accredited, so it's Highlands and Islands Sheep Health Association. They're accredited free from the zootic abortion. We keep them accredited, and when we sell, we're gimmers, so we gimmer them and we sell them a year later, and so they remain accredited. We managed to keep them accredited. So we also buy in shorthorn sired calves, spent calves or weaned calves through Dingwall again every year. They're coming off usually hill farms, so we find that they tend to flourish when they come home and onto better grass, and we keep them right through to finishing time. Got them on farm maybe for 15 months plus. They're sold straight to Woodheads in Turriff, which is part of Morrison's supermarket, and we benefit from the shorthorn premium scheme there. So I've worked in accountancy practice since I left school, worked for various firms. Latterly worked with quite a large, well-known firm. I was there for 14 years. I'd always had a hankering to be my own boss, and I was craving flexibility as well, juggling farming life, family life. In 2020, there was a lot of change happening, so I just decided that that was my time to grab an opportunity to set out on my own, establish McKilligan Financial. I wanted to do things a wee bit differently. I wanted to be different from any other accountant. Quite easy for me to target rural family businesses because we are living that life ourselves. I know what it's like to live on a farm. I know what the lifestyle is like. It's not a 9-to-5 job. It comes with its own unique set of challenges that you don't tend to see in other industries. It was the back end of 2020 we sort of launched, and it's just really grown from there. We've got well over 300 clients now, really just, as I say, accumulated over the last 3.5-4 years. I always wanted to be part of a team, so it was never my intention to just be me. I thought we'd grow a small team, and in 2021 I recruited the first 2 team members, Dana and Valerie, and then since then we've added to the team. So today we're a team of 8, but we'll be a team of 9 by the end of the year. We purchased an old bungalow that was just along the road from the farm. So it's basically on my doorstep, but off my doorstep, but on the main road as well. It was in a really good location, and I just thought that would be a good location for my office. We've got quite a focus on planning ahead for tax purposes especially. We're often helping people project ahead to what their figures are looking like maybe for the end of the year, just to help them manage their tax position. It's not about wiping out tax bills altogether, it's just about managing things. For example, lots of the times people will maybe want to go and buy machinery, but I always encourage people to think about, well, do you really need that machinery, or are you just buying it to save tax, for example? Because it needs to be sustainable, and there's also the impact on cash flow as well, because if you've spent, say, £10,000 on machinery, it's potentially saved you £3,000 or £4,000 in tax, roughly, but you've still spent £6,000, £7,000 more than you maybe needed to, and it's got that impact on cash flow, whether it's now or whether it's over the next few years if it's on finance. So we do encourage folk to think about that. Land availability is a big issue for farmers. The price of farmland is great when you're selling land, but it is a big obstacle, especially for new entrants that are they've maybe just relied on seasonal grazing up to now, and they're wanting to get a permanent base. It's really, really difficult for them to get started on the farming ladder, whether it's through purchasing land and the cost of it, or there's very, very few tenancies on the go these days as well, and so there is just more and more reliance on seasonal grazing. But seasonal grazing can be really hard to find as well, and there's so many people after it when it does become available. Often farming on its own can't repay the borrowing for that land. It needs other money, so whether that's coming from off-farm income, maybe it's renewable energy, maybe there's been a sale of land or assets or something elsewhere. What we find is that farming on its own doesn't pay for the purchase of land, and that's a huge obstacle. There's changes happening that's affecting holiday let businesses. There's been draft legislation published just in the last few weeks to abolish the furnished holiday let regime. So this is affecting farmers who maybe have a sideline business. Maybe they've just got one holiday cottage on the farm, but maybe it's it's almost a separate business where they've got several lodges, cottages, whatever. With the abolishment of the furnished holiday let scheme and the tax advantages that it had, it means that assuming the legislation goes through, it means that these holiday cottages are going to be taxed just as if they're a normal rental property. Now, in some cases, that's not going to cause too much problems at all. It'll be fine, but it does cause issues where somebody's almost full-time occupation is looking after these holiday cottages. Whether it's just for the summertime or whether it's year-round. It can mean, for example, that they can't make pension contributions because the income from rental property isn't relevant earnings for pension contributions. So we're seeing cases where somebody who is working full-time, looking after a holiday lets business, won't be able, and they've got no other income, won't be able to make much pension contributions in the future, and that doesn't seem very fair. So we've actually been speaking to ICAS just this week. I had a call with ICAS, so that's the Institute of Chartered Accountants of Scotland. They are in direct conversations with HMRC about the impact that this legislation is having. One of the things that we're putting across as well is that the VAT treatment is not going to be changing on the holiday let. So at the moment, the letting of holiday accommodation is vatable. So if you're a VAT registered business, you're charging 20% VAT on there. And there's no plans to change that. But generally, you don't charge VAT on a normal rental property. So on the one hand, the revenue are saying that a holiday cottage business is not a proper trading business. But on a VAT perspective, they're still treating it as a trading business. So we're saying that this isn't, it's not consistent. So we're just highlighting these points to them. There's a lot of changes, and we are speaking to clients and helping them navigate through this. So it'll be interesting to see if there is any changes before that goes live in April 25. We're actually hoping it'll be delayed, but I don't know. I'm not holding out much hope. The price of machinery is another big challenge just now. Over the last few years, we've seen huge increases in the price of machinery, and we've been sitting down with farmers and contractors as well to work out the costs of running these machines. And sometimes, in some cases, even these machines running at full capacity is struggling to make ends meet. So we're encouraging people just to be mindful of the costs and really challenging as to whether the machine is actually a good purchase in the first place, and just being mindful of cash flow and the finance payments being spread over however many years as well. Farming businesses usually are very reliant on government support. There's various schemes around, and there's lots of changes happening with that over the next few years as well. So one of those is the calf scheme. Payments are going to be changed and based on calving interval, and so it's quite interesting hearing how that can impact farmers and farming businesses. But it's also interesting to hear from some farmers as well that who are maybe more focused on improving their own efficiencies. And I think that's the key message, is just farmers need to be focusing on their own efficiencies, making sure they're working with stock that suits their farm, rather than stock that maybe looks better on the eye, for example. Just they want to increase the profitability, and if you can get the support to top that up, then that's great. But I think the key message is just to drive a more efficient, sustainable business. We encourage clients to get in touch with us. We want to be contactable through the year, and not just a once a year, here's your accounts, there's your tax, see you next year. That's not how we want to operate. We do encourage people to get in touch with us and chat through if they're planning any expenditure, maybe if they're planning to sell assets, so on. Just pick up the phone, just chat it through with us, see if there's anything that we need to be thinking of. It's just planning ahead as well, not just for the next few months, but also for the next few years. And that leads into succession planning as well, and just the communication around everything is key. And also we encourage farmers just to look at their costings and whether they and just look for more efficiencies. What efficiencies can they make in their business? What changes can they make in their business to make it more efficient and more sustainable? So, for example, that might be using a contractor, for example, rather than buying a piece of kit. And especially if you don't have high acreage or high numbers, to be able to get the best use of that piece of machinery, consider using a contractor instead. But it's just, looking at costings to make your business more efficient and ultimately more profitable. I knew that there was an opportunity for a more modern firm that wanted to provide clients with a good service, and so that was kind of part of what drove me towards setting up. I'd known that there was an opportunity there for quite a while, just to do things a wee bit differently. I don't want to be the same as any other accountancy practice. I want to be a wee bit different in serving clients, doing the best for our clients and looking after our clients. So why is it important to plan ahead? All your income coming in 1 month or 1 quarter, for example, and then you've got the rest of the year where it's just all going out and down. So it's just managing that and being mindful of what costs are coming. So if you're buying straw, for example, just now, or if you're buying straw later on, further through the winter, another feed as well. It's just being mindful of costs, cash flow, and knowing how much you're needing, having a budget for it as well. But obviously market dynamics play havoc. So farmers have been affected by basis period reform, which is where the government announced the change to a 31st of March basis. So historically a lot of farmers had maybe 31st of May year ends, or possibly 30th of November as well. There has been quite a lot of 31st of May year ends, which ties in with old tenancies. The change to 31st of March basis means that, for example, if they had a 31st of May year end, that 31st of May 2023 accounts goes on to your 2024 tax return. But also the 10 months through to 31st of March 2024, so 2024 is the transition period, that 10 months from June 2023 through till March 2024 also goes on your 2024 tax return. So we've got almost 2 years worth of profits coming through on the one tax return. Now there are, so we've been working with our clients over the last 2-3 years really since this was announced to help them manage their tax liabilities really for this transition period. That's really helped, but we are still seeing in some cases where maybe they didn't feel the need to spend money, they had no reason to spend money, which is quite right to save tax. You know, so we are seeing cases where farmers have got almost 2 years worth of profits coming through on the one tax return. Now we've got the option to average, for example, the May 2023 profits. In a lot of cases, farmers have had more positive figures and stronger figures over the last few years. So averaging has in some cases it's been really beneficial, but it's been less beneficial in other cases. But we're also, but we can't average the transition period. So in this example, a 10-month period to 31st of March, we can't average that. But what we can do is spread those profits over the next 5 years. I'm always wary of doing that though, because that means that in 5 years' time, you'll still be paying your tax from last year. And I don't think that's right either. So we're only really doing that in the cases where we think that they'll be paying less tax over the longer term by spreading it. Whereas if it makes no difference to the overall tax burden, they're as well just to pay it now, and it's done, and it's not a headache for future. But we have been working with clients over the last 2 to 3 years to help them manage those tax bills and bring them down if we can as well. The change to the 31st of March as well isn't really ideal in the farming calendar, because 31st of March is busy. It can be in the middle of lambing time, it can be in the middle of calving time. You're maybe trying to get crops established as well, just depending on the weather. So 31st of March is not ideal. Drive by the revenue to make tax digital started with VAT a good few years ago now, and that really pushed farmers onto using software for their record keeping rather than the traditional cash book or spreadsheets or whatever. So lots of our clients are using Xero. We really like working with Xero. We can access the data live today. We don't have to wait till months after the year end before we're seeing figures. We can access it today to see how the business is performing right now, as I say, rather than wait until after the year end. There's lots of advantages to using Xero, and it really helps streamline the bookkeeping process as well. So first of all, it links to your bank account, and it'll pull in the bank statement information, and it just makes the record keeping so much easier. It's just pulling in live data that's updated on a daily basis. You can store your records digitally so that you've always got them to hand. They're not lying in a pile of paper somewhere at home, maybe buried in the office or whatever, you can access them. So you can actually store copies of your invoices within Xero and access them on the app as well, so that you can actually access them when you're out and about. For example, one of the things that I use it for at home is when we're updating the medicine records, for example, I can just go in and see you know, all the vet's invoices, or the you know, all the purchase of the dosing wormers and so on, and look up the invoices there and then for the other batch numbers. And yeah, just as I say, it's just much better than rummaging around with a pile of paper. I wanted to be the trusted advisor that folk could pick up the phone to. I didn't want clients thinking, oh, I'm scared to pick up the phone to her, she'll just go and charge me extra fees or whatever. I wanted to be approachable. I want to help clients, basically. Just want to help them plan ahead, achieve what they want to achieve, and just to help them in all sorts of ways.